Following is a weekly recap from the 19th to the 23rd of January 2026. After rising from 1630 to 1919 points, the index recorded its first corrective week of 2026. The index ended the week down 8 points, closing at 1870 points. The correction was relatively calm and technical in nature. Selling pressure increased but did not trigger panic, acting primarily as a rebalancing and profit-taking phase after the overheated rally. Alternating bottom fishing demand helped prevent steep declines. Liquidity went down significantly to a total trading value of almost 175,000 billion VND on the Ho Chi Minh Stock Exchange, indicating that cash flow has shifted to a cautious and probing stance. For sector performance, strong decliners include mid-cap sectors such as textiles, insurance, and plastics. Previously leading state-owned enterprise stocks also weakened. Meanwhile, in the highlights, the chemical sector recovered after bottoming out. Cash flow shows signs of shifting toward real estate and securities, but was not yet strong enough to form a new leading group. Experts suggest the VN Index may need more time for accumulation or could potentially correct toward the 1800 to 1810 point range. Investors are advised to prioritize stocks with solid fundamentals and positive Q4 earnings, while avoiding price chasing or high margin usage during volatile sessions. Monday, January 26, 2026. Selling pressure mounted, which led to the VN Index retreating deeply to the support zone. The index had its most negative session in weeks, plunging 27 points to close at 1843 points. The VN30 index fell even more sharply by 45 points. Liquidity increased significantly during the afternoon session, with total trading value on the Ho Chi Minh Stock Exchange exceeding 32,000 billion VND, indicating heavy offloading pressure. Moving on to sector performance. Real estate and securities were the focus of the sell-off. Aviation, chemicals, and fertilizers also underwent deep corrections. The oil and gas sector moved against the trend. Heavyweights like BID, VCB, and GVR acted as anchors, preventing a further index collapse. Foreign investors took advantage of the decline to net buy 110 billion VND on the Ho Chi Minh Stock Exchange. Most purchase tickers include BID, VNM, and VCI. Conversely, VCB, DGC, and MWG were net sold. The VN Index has broken below its M820 and is heading towards the 1800 to 1810 support zone. Experts predict the market may resume its upward trend at this level. Investors are advised to maintain their portfolios and consider increasing positions once the index successfully tests the aforementioned support mark. Tuesday, January 27, 2026. The stock market stayed in the red for the third consecutive session. The VN Index closed down 12 points, retreating to 1831 points. Cautious sentiment prevailed as selling pressure remained high. However, the drag was mainly due to the Vingroup duo, which combined exerted minus 21 points on the index. Trading volume slightly decreased compared to the previous session, reaching over 28,000 billion VND on the Ho Chi Minh Stock Exchange. This suggests that buyers are becoming hesitant, waiting for more attractive discounted price levels. The oil and gas sector continued to rally alongside several banks, providing much-needed support to the market's wavering mentality. Be that as it may, the banking sector witnessed a clear split. While some attempted to support the market, others closed below their reference prices. The worst correction happened to the residential real estate sector, as many besides VIC and VHM stayed in the red. Foreign investors closed the day with a net sell value of 106 billion VND, with buying power focused on the industry-leading blue chips, reflecting long-term confidence despite short-term market volatility. The VN Index is in a necessary technical correction to consolidate its price base after a prolonged uptrend. The psychological support zone of 1800 to 1820 points will be a crucial test in the coming sessions.